Guys, welcome back to the channel, welcome back to a new video. Today we are going to have a look at the S&P 500. Reason is because the S&P 500 is the biggest index in the United States and is therefore leading, but also is very much correlated from time to time to Bitcoin, meaning that they both move at the same time. That correlation was gone for quite some time after the FTX dump. But lately is now one-on-one back again, so therefore the S&P 500 is a nice leading indicator for what Bitcoin is going to do. So it's sometimes good to kind of zoom out and have a bit of a bigger perspective and look at other markets or other indexes that might lead the way for your trading pair. Before we're going to dive in, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything, leave me a comment, share the video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram. I have been absolutely spoiling you lately on Twitter and Instagram, so definitely check that out. Links are in the description. And before we really start diving, I want to give a shout out to that one unsubscriber that we had today. So if you want to fill the spot and become member 77 to this tremendous channel, then be my guest and subscribe to the channel. Alright, S&P 500 or the SPX, as you can see here in the left top, that is the ticker. And we have been going up a little bit. This was the bottom so far at approximately 3,500. Then we went up and now we just have a little bit of a retracement, made a nice rounding bottom right here. You might see some gaps here on the charts, and that is the difference between the closing and the opening. It's also called a opening gap. So this is where the day closed, and then this is where the day is starting, and therefore you have an openings gap, and that's also due because of the future markets and after trading hours. So therefore I always like to use the ES1, also the S&P future market, because that one is more fluent, has also more trading hours, and doesn't have these opening and closing gaps. So you're actually looking at exactly the same. One is the futures, ES1. Also, if you want to look at it in Tradingview, just type in ES1 exclamation mark, you get it right away. And the other one is the S&P 500, also called the SPX. If we are looking at the ES1, then the first thing that we are seeing with the exact same Fibonacci retracing tool from the bottom to the top is that here you can see that the bottom was just underneath the 0.5 of the Fibonacci retracement, where for the S&P 500 index, the regular index, that was just at that golden pocket. So if we're talking about targets or where we can look out for, this was actually a nice place to reverse to the upside, but what I'm actually looking out for is for the S&P 500 to go further down and eventually test that 3,500, that bottom that we once made in. If we want to do a textbook retracement, then first the S&P needs to go back up to approximately 4,030-ish to reach the golden pocket and to then reverse down. I didn't really like this one actually, because like I said, it was not as nice on the 0.5 Fibonacci retracement, but also it missed the golden pocket, which is also always the preferred pullback. If it is the pullback and we are going higher, then actually we need to see this as a sign of strength, because the price couldn't make it till the golden pocket and just went higher right away, and then we are due for much higher prices. Why don't I like the bottom here? Because so far we just went down once, touched it, and then went up again right away. This is the 4-hourly chart, as you can see, and it was just one candle and right away up, and we have not retested this bottom. It's also not, other than a nice round number, a very significant number, and therefore actually I like to see a retest. With that being, then we'll also take out the liquidity here that's being built up, but also liquidity underneath these lows. And as you know, I've been talking about that a lot. I like that when liquidity is being taken out of the market. So eventually for us to go much lower, that would be more than 10% dump from here. For a while, the S&P 500 was almost down 30% in the year 2022, but eventually we had that rally back up starting from October and then till December. Then there's a little bit of a drop later on in December, but eventually we ended the year at approximately 20% minus. Now I did some digging, and the 3 years Prior to that, the S&P 500 gave a return of approximately 20%. So 3 years in a row, approximately 20%, which is 60% return. Way above average, because the average is approximately 10% a year. Now, if we take the last year, so the minus 20 of that 60%, we have 40%. Now I already have that over a time span of 4 years, 3 years up, 1 year down. So that actually, believe it or not, with the dump of last year and the 3 years prior, we are exactly right now on the multi-year average. So to respect that average, we should actually write down a plus this year of approximately 10% for the S&P 500. I mean, we could go down, of course, but it looks like so far the index is starting pretty positive. I also saw in some other data that the S&P 500, after it had a tremendous drop down of 20% or more, which only occurred a handful of times, the year after it is an 80% chance or almost a 90% chance that the year will be green, will be positive. I have been very cautious with my predictions. I said kind of flat at the end of the year, plus minus 3-4%. But the way it's setting up right now, I think we might end the year much stronger than we think, unless inflation is suddenly spiking back up and the Fed needs to raise interest rates again. But it looks like we are going the right direction. So again, if we are going lower, first I want us to take out these lows and eventually the lows here. The golden pocket is still a place where I'm looking for a potential bounce. If we're zooming in, you could also say that this area where we have been trading for quite a while, and that was approximately then a 2%, 2.5% trading range. We started off in there approximately 19 December, that this is the trading range, and what we are creating right now is a bit of a deviation from that trading range. So if I make a block like this, then you can see that this looks like we are just entering a bit of a deviation, and then eventually let me get the brush again, then eventually we're going back down, and then usually you break it to the downside. But this is to trap the long traders thinking we're having a breakout and eventually it goes lower, and then we're seeing much lower lows. I have said this already many times, but the DXY is inverse correlated to the S&P 500 and to other risk assets like crypto. I have showed you this already many times in the last week or two, and that is that we are creating this gigantic bullish divergence for the dollar index on the daily. Once this start playing out and we are reversing to the upside, then we can expect quite the intense drop for the S&P 500. It has always been like this in the last year or two or even longer. So I do expect that once the dollar index is really gaining strength and we are firing off, and that could be quite ferocious quite fast, then I expect a pretty big dump on the S&P 500 and therefore also on Bitcoin. Now, nice detail is that if you want to know what BTC is going to do, the ES1, so the S&P futures, they are running ahead approximately 15 to 30 minutes. So if you already are seeing a drop on the S&P futures, you betcha that is probably also going to happen to BTC. So therefore you can maybe anticipate a little bit better on your daily trading if you are a day trader. Then quickly to the indicators. On the daily, it actually looks pretty good so far. Market Cipher B is going up, money flow is pretty strong, VWAP is higher, momentum wave is higher, RSIs are still a little bit split, but I have to say it looks like it has much more room to the upside. On the 8 hour, also here this looks good, a bit of a curvature for the money flow, momentum wave higher, RSIs also here split, but doesn't look all too bad. Then the 4 hour, that one could give a bearish divergence, but I think actually with another trading day upcoming, this will probably go higher, and then there is no divergence in play at all, because of course the second hump needs to be smaller. Not too much going on here, I would say, other than that the RSIs are looking pretty good. Then just the hourly, this also actually has been looking pretty strong. As you can see, money flow has been thick in the green. Same for Bitcoin and for some other assets that we're really seeing a little bit of a relief rally or starting rally of the year. So that so far looks pretty good. S&P 500, same kind of scenario. So what I'm trying to conclude is that eventually, I hope on the macro, we are going lower and we are going to retest or revisit at approximately 3,500. If we do, I will be heavy buying. After that, I have, I think, a target of approximately 3,200. That's pretty far. That will be also, by the way, a super macro target. You know what, let me take that out real quick, and that is the Fibonacci golden pocket measured from the Corona dump all the way up. Yeah, exactly, 3100 to 3190, so let's say 3200. That is a very big one. You can also see that we found 2 times support here. This is again on the daily chart. The golden pocket measured from the Corona dump bottom to all the way to the high of December 21. So if we would trace that, I would definitely be a heavy buyer, but I wonder if we make it this far, because that is still quite the dump. Let me check for fun how much that is percentage wise. More than 20%. Yeah, so I mean, never say never, but I do think that that is probably pretty unlikely. Yeah, we have to see kind of how that plays out. But for now, I would be cautious. If we see the 3,500 once again, I think that's already pretty nice. And then again, like I said, personally, no financial advice, I would be buying because we are right now at the average, and if we are going down, then we are going below the multi-year average, and therefore we need actually from that point on a high bounce just to respect that average again. So that's sometimes nice to kind of zoom out and know these kinds of statistics, that you know what is the chance for us to go lower or higher. A little bit different video for once. I also, like I said earlier already this week, I want to zoom out a little bit and zigzag and also check out other assets, other charts. If you like this kinds of stuff, then do me a favor, like and subscribe. Click on the bell, click on also so you don't miss anything. Also feel free to leave me a comment. You can also follow me on Twitter and Instagram. Those links are also in the descriptions. And see you guys very soon again in the next one. Bye bye.